From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.
Welcome to the fourth edition of the Digital Transformation Series organized by the Association of Black Securities and Investment Professionals in partnership with Standard Bank. I am Veronica Mutouzi, the founder and the CEO of Smart Digital Solutions, a homegrown South African-led digital transformation company. I will be moderating this conversation on the regulation of financial services in the age of digital. Before we get into our conversation, I would like to hand over to Mr. Thabiso Ratshefula, the Deputy Secretary of ABSIP.
So thanks, Veronica. Good evening, everyone. My name is Thabiso Ratshefula. I'm the Deputy Secretary General of ABSIP. And really on behalf of the NEC, I'd like to welcome everyone to this webinar. I must admit, on my side, I'm really excited for this webinar in particular. This is the fourth and final, sadly the final episode of the series that we've been running since September on digital disruption. And I think if you're anything like me, I work in financial services as a derivative trader, and I've always heard this term of digital disruption and 4IR, and I've never really understood what that means. And what the series has really done is really help unpack that for me, what this 4IR means, what it means for me, my career, what it means for financial services, and really for the economy at large. The first episode we dived into really unpacking this topic of 4IR. In the second episode, we had it was all about skills and how you train your workforce through this sort of like digital disruption era. The third episode was all about unleashing fintech, and this fourth episode, which I'm really excited for, we're going to be speaking about fintech, digital disruption, and regulation. So I'm really excited. The group of panelists that we have here, it's an amazing group of panelists who are ready to share their insights. Our sponsor, who is Standard Bank, has really gone over and beyond in making sure that this series is everything that it can be. So I really do encourage everyone to really dig in, engage, ask questions. I'm looking forward to this final episode of the series, and I really hope that you will enjoy. So with that, the NEC really does welcome you, and I will hand over back to Veronica to really lead us through the rest of this episode. Thank you.
Thank you, Thabiso. The global emergence of fintech continues to disrupt the traditional financial services landscape. Increasingly, banks and financial institutions are rapidly under pressure to innovate. The relationship between bank, financial institution, and the fintech community remains complex, with some entrepreneurs seeking to collaborate while others to disintermediate. The tension between the use of technology, innovative technology, and regulation is not new. There are case studies on how new technologies combined with business model got ahead of regulation. Join me to discuss the need for smart regulation, balancing the need for innovation, best customer experience, and protecting the customer, as well as how can regulation enable collaboration between the traditional financial institutions with disruptors known as fintech within the financial services industry. I have an expert of panels. They are Ms. Tabs Kadir, the brain behind Uprising Africa, the first equity crowdfunding platform in South Africa. I have Lou Glassens, who is the managing partner and the co-founder of Newton Partners, a venture capital firm founded in 2014. The firm invests globally in early stage emerging technologies as well as disruptive business model startups. And lastly, I have Mr. Lincoln Mali, who is an experienced banker with over 20 years in the industry. Lincoln has been with Standard Bank Group for the last 19 years and is currently the head of Group Cards and Emerging Payments. This is an interactive session. Feel free to use the chat button or the Q&A to capture your comments, insights, as well as questions. To my panelists, welcome and good afternoon.
Thank you so much.
Mr. Lincoln, I will start with you. Just to refresh our mind and really paint a picture for us in terms of the card and payment innovation landscape and what are the regulatory challenges within the payment as well as the banking space.
Thank you, Veronica. Thank you so much for ABSIP for having us. I think if we think about the two biggest things changing the world, it is the growth of new technologies and the growth in data that is consumed every day by all of us. What that spawns is huge innovation in all aspects of life. If I confine myself to the financial sector, this has brought huge innovation by a number of players. One would be the fintechs, who see an opportunity to take on the large players like banks. Others are the big platforms like your Googles, your Alibaba, and so on, who have the strength to take on current players. Now, when you come to card and payments, everybody wants to disrupt that part of the value chain. If you look at the number of fintechs that are operating in that space, it's because all of them have recognized what clients are looking for. Clients are looking for faster payments, they're looking for secure payments, they're looking for frictionless payments, and they want to be able to make sure that those payments are making the economy to go faster and make sure that commerce in whatever form is actually progressing. And lastly, they are also making sure that people can pay in any form factor. People want to be able to pay in whatever way they are able to pay. So within that context comes regulators. And I want to state it very clearly. Regulators are not an enemy, certainly not for me, because I think that there are two extremes. The one extreme are those environments where people think there should be no regulation. And I respect their views. But there are also those people who are regulators who want to regulate everything to death. I think the truth lies somewhere in between what I call smart regulation. Smart regulation allows innovation to take place and only comes in to safeguard either consumers or safeguard commerce or safeguard an industry or safeguard the entire ecosystem. So in my view, we need more partnerships between us as players and regulators so that they can help facilitate the growth of more innovation. So that's how I would sketch the picture at the beginning.
Thank you, Lincoln. And I'll just stay with you because there have been also critics that regulators are not really ahead of technology and they delay the growth and the level of disruption that is really required. Well, how do you engage with banks? How do you engage with regulators to ensure that they are in par with what's happening within the financial services space?
Yeah, what I've
and
found,
innovation.
yes, what I've found, let me start internally within our own organizations. We have people from the risk fraternity, and sometimes we treat them as lepers, and we treat them as the kinds of people to only kind of hide and only bring them out when you're about to launch a product or a new service. But what I've found is that once you involve those people quite early on, get them to understand what are the pain points of clients. Why do you want to come with this innovation? And what are the benefits for your institution and for the clients? I find that I'm able to get more things out with them. Similarly, outside, because if your own people who are risk managers are not comfortable with the level of risk, are not comfortable with the level of responsibility you have, that kind of message also filters through to the regulators, filters through to external auditors. And so you find then that regulators become more hawkish. But I found that once you start to involve regulators in our thinking, we make them partners, we make a lot of progress. So in my work, I work with about 17 countries on the continent, and we interact regularly with different regulators and tell them sometimes of our plans at their inception. Of course, they wear different hats. Of course, they have to look at different things than we do. Of course, they have a different lens than we do. Hostile relationship with them is not going to help anybody. Also, for a bank in particular, we all know what happens when banks fail. The pain is borne by so many people, by depositors and so on. So I do recognize the role that the regulators play. My view and my responsibility is to try and persuade them of what the future holds. We take some of those regulators to other markets where things are taking place. For an example, if I take China, I spend so much of my time in China and I see the future. The future is here, it's now in China. There are many cities already in China that are cashless, large cities that are cashless. That's where we're all going to get to. But China is already there. But if you're not taking the regulators there and show them that we have the same objective of reducing cash, and how can we work together to increase digital payments, you'll find them being hostile to you.
Wow, that's interesting. And I can imagine as a multinational dealing with different regulations or laws, to innovate might be a challenge as well. I would like to go to Tabs. Tabs, please tell us about Uprise Africa platform and what are the regulatory challenges that are faced in your space, which is the equity crowdfunding.
Thank you, Veronica. So yeah, I would start with where there is a disruption. It starts with it starts with trying to find a solution to a problem, not the technology, the enabler of the problem trying to a solution, right? In my case, this crowdfunding platform, I have no tech background, neither I have financial service. It was merely done out of trying to bring a solution. I had a problem to access fund for my own startup. That's how the platform came into existence, when doors of each and every could not get funding for my own startup, which was doing well, but just needed a little bit of support. I mean, most of you are aware of that. It was an airline. So these type of businesses, whether it is airline or a hospital business, now because of the COVID, you see which are in the rescue. No traditional institution touch them. So where would they go? I mean, either so equity is more suitable for a startup or business which is almost in rescue. Because a startup, no bank or no funding will be available for them, or a rescue which too late, the company is not a going concern. These points, I believe that platform was created for these two entry points. Something which has not never been done before in South Africa. We have seen Stockwell market. The concept is there. It's just how the technology and how it is done from a regulatory point. As far as the regulatory challenges, it was a challenge to adopt the regulation rather than looking at exemptions. Of course, it's tied. There are lots of admin-intensive processes which we need to do because we have managed to adopt these regulations. In ideal case scenario, there should be an exemption to these. For example, the disclosure, the 100-page prospectus. These things are not viable for a startup. They can be a rescue business, but these are not viable for a startup. As a platform, we also are. So there.
Tabs, just for a second there, I think we've got a reception problem or a connectivity problem. I will come back to you while you trying to, the technical team are assisting you to sort out connectivity, because it is very important that we hear what you are saying and we engage with you properly. And I will come to you. We're talking about the digital tokens and cryptocurrencies that are really gaining a momentum around the world. I'm not sure about what is the situation in South Africa. Can you please just paint a picture around that and how regulators are coming in? Also touch on the issues of digital currency.
Sure. Thanks, Veronica. So in South Africa, we've been quite fortunate in that quite early on, the regulators put together an intergovernmental financial services working group to kind of say, let's take the various stakeholders that could be affected by this emerging asset class and get them to contribute to the conversation and understand the various issues. And fortunately, that process started in 2014, actually. And so every year, at least once a year, that group of regulators publishes a positioning paper that builds on top of their previous position as it relates to regulating crypto assets. And when I talk about crypto assets, there really are sort of 5 predominant use cases. Easiest way to understand them is it's the issue of this crypto asset or token. It is the trading of that crypto asset or token. It's storing it in a wallet. It's storing it in cold storage. And it is using it to pay, and it is using it as possibly a store of value. And the approach that they've taken is to say that there is no, some jurisdictions have taken the approach of saying it is a commodity, or it is a security, or it is, money. And what our regulators have said is we will treat it based upon how it acts. So the old story of, like, if it walks like a duck and it acts like a duck, then it probably is a duck. So there is no classification at this point in time from a South African regulator perspective of what is a crypto asset and what is it not. It depends on how you use it. And I think that we've been very happy with the way that the regulator has approached it up until this point in time, which is really saying we will see how it develops. We won't take a heavy-handed approach. We will monitor things, but what we are concerned about is this technology going to is it going to be used for terrorist financing? Is it going to be used for tax evasion? Is it going to be used to circumvent exchange control regulations? And then on a much longer term basis, do we think that it puts pressure on the national payment system or creates problems there? Does it influence the ability to implement fiscal policies and monetary policy as well? And unfortunately, the approach has been too early, not an immediate term risk, but also need to be mindful of the fact that if the regulators come out and say, yes, it is acceptable in these circumstances, that they will in fact give it legitimacy. And they believe that if they give legitimacy to these assets, you will have a parallel financial system that will develop. And the challenge with these things is, and if you read the most recent paper from April 2020, actually, you'll see that there's a very clear path for how these things are going to be regulated depending on how you use them. The problem is that they almost inevitably end up in some kind of licensing requirement or some kind of responsible reporting responsibility. And that's interesting conceptually. The challenge is that it misses the fact that these technologies are, you really can, they're easiest to regulate as they interface with the existing financial system. So for example, we talk about on-ramps and off-ramps. And so when you convert it between rands and say, for example, Bitcoin, then it is possible to identify the person at that point in time that's doing the exchange. And you can kind of go, you need to protect consumers, you need to ensure that you have sufficient security in place and so forth. The challenge is that these technologies are only in a very immature state, and in a full, in their end state, we believe that what they will do is enable what is called DeFi, or decentralized finance. And what decentralized finance basically does is it creates I guess you could call them cooperatives, like digital cooperatives, where there is no specific one entity that owns it or controls it, uh, or is, you know, the accountable institution. There is just technology that enables people to coordinate economic activity. And in that scenario, the stuff is exceptionally hard to regulate. And the regulators do not have an answer for that.
Sure, that is very interesting, and we will be also talking about, as we talk about this digital cooperative, the issues of security as well, and how data it is managed. But before we get there, I would like to request our audience to send their questions or comments to us. We are looking forward to engaging at that level so that this session can be very valuable to all of us. Lincoln, I would like to know your opinion, because there've been issues around open banking system. So do you see the regulators telling the banks to open up their system to help the fintech come in and connect their APIs so that they can provide a service to a customer? You are on mute, Lincoln.
Sorry, if you look at the European example of PSD2, there was a lot of compulsion by regulators for banks to open up, to increase competition, and so on. I think that the way we've thought about it was there are a number of very positive things that come from open banking. One, you are able to give customers choice. Two, you are able to produce or come up with new solutions with your partners, which in this case might be another bank, it might be a fintech, it might be a telco. So the development of APIs become a strategic thing for every organization. And now most organizations are moving into running their businesses as platform businesses. Now, the fundamental concepts that were there in open banking of opening up the system, obviously with the right checks and balances, lends itself well if you're going to have a platform system, because it means that you have to have the right APIs that interface with sometimes a client, or that interface internally, or interface with a fintech. So if I think about some of the products we've produced over the last 18 months in our business, everybody will see that as things that are done by Standard Bank. But people will not know that behind the scenes, we are doing it with a number of very smart fintechs, because we have a way of working together with our APIs. The one caution in open banking is that you have to know what APIs you have, how you share them, and the purposes for which you share them. These are your crown jewels. So you got to know what you're doing, because if you get it wrong, you can get it wrong quite badly. The other challenge is, how do you deal with data breaches, or how do you deal with cybercrime? Because remember, if you are in this partnership and we are sharing all these APIs, people know the bank. They've given their information to the bank. They work with the bank. They don't know the other partners. If one of the partners is vulnerable and their data is compromised, you as a bank are still accountable. Equally, when it comes to cybercrime, all the people in cybercrime do is that they keep knocking all the time. They are waiting for that little door that's open. And that door might not be with you as a financial institution, it might be with your partner. But overall, I'm a big proponent of open banking, because I think that it does help us as banks to be more nimble, to be more agile, to benefit from the technologies that come from the fintechs. But from the regulator side, I think open banking helps regulators at a number of levels. One, it helps them to promote financial inclusion, which I think is important as you start to see telcos, you start to see mobile money, all of those things. Secondly, they are demanding that we open up the payment system because up to now, the payment system has really been exclusively controlled by banks and other financial institutions. So through open banking, this will happen. Thirdly, they want to get rid of a monopoly in financial services and create more competition. So I think open banking, is likely to help with that.
Thank you very much. You also raised the issue of, so what you are saying is that open banking really doesn't necessarily need to be regulator driven, but businesses have to be agile enough to appreciate the fact that the world is moving, and to remain competitive, they have to open their system and build APIs for the fintech to be able to come in as well as play, which is a very good thing. And you've been talking about cyber crime, cyber attack, which has a huge implication on the business, because we as customers, we are interacting with your systems. We trust that everything is right. What is the role of the banks and the regulators, and what is happening around the issue of cybercrime and cybersecurity? I will ask Lou to take that one. Sorry, Lincoln.
Excellent.
So I'll talk specifically about sort of these emerging blockchain-based technologies and some of the concerns around, are they secure? And by design, some of them have a decentralized network design, which basically means that there is no central point at which this information is stored that you can sort of attack. But conversely, as soon as you do have those kinds of collections, typically like at an exchange or in a wallet or something like that, then you do create that situation where there is technology that's maybe not as secure, not as mature as typical centralized solutions today, and they do definitely create risks. But I think what you'll find is, there are two types of these technologies. You've got public blockchains, you've got private blockchains, and you've got sort of hybrids of the two. And a lot of the types of technologies that are currently being considered for implementation by central banks around the world make use of public or rather private blockchains. And the benefit of private blockchains is that they're permissioned, which means that not anybody can access them. There are user access rights. You don't get access to all the information. And so you can implement them in a way which is as secure as any other centralized solution. Personally, I have serious doubts in the long term about the viability of any centralized solution as it relates to security. But I'm also not the cybersecurity expert. The point is that these technologies by design are mature, but they're also immature, or rather secure, but rather immature at the moment. And so, yes, absolutely, they are dangerous. Yes, if you are trading in cryptocurrency assets, if you're holding balances in cryptocurrency assets, don't put your savings in that. This is very early days. So if you want to play with these technologies, you understand them better, and you want to be able to send money, friend to friend, and go, wow, I wonder what this would be like, or I want to be able to, that's fine. That's perfectly fine. But implementing these technologies at scale in a live environment is fraught of danger at the moment. But we are leading to a situation quite quickly where it is going to happen. I think there was a number just recently. There's been $200 million of transaction activity that has already gone on the digital renminbi. So China has already implemented this technology. I think it's running a pilot in 3 cities.
Yeah.
And basically what's happening is that you're able to do. Imagine, for those of you that have experienced sort of Bitcoin, which is the one that's most widely seen, known. Imagine that you could use that kind of technology to transfer rands, and that's basically what China has enabled it to do. And they so far believe that they're seeing great benefits out of it, and that you're actually seeing an increase in level of economic participation already around payments, storing of small balances, microinsurance, And so I think that one must always look at this in terms of sort of how mature and how secure the technologies are, but it's definitely coming. And it's not that the technologies themselves are not secure, it's just that they are immature.
Sure. Interesting. Lincoln, there's a move now within the financial services sector to migrate to the cloud. That also talks about the security, because most CIOs have been saying that the cloud is not secure. However, most of the fintechs have their platforms in the cloud. What is the bank's position and the regulator's position on moving to cloud?
I think the movement to cloud is inevitable. I think just the sheer amount of data, both structured and unstructured data, that we either consume or generate every single day is just beyond the normal server mindset. So
Mm,
it's possible for us to run large entities, with a server, behind a few desks and so on. So clearly, many organizations have sought to go to the cloud, but the ones that go to the cloud with the right partners understand that they are still accountable for the security of the data that's there. And that it's important that it becomes a partnership between yourself and whatever organization that you work with. There are huge advantages from an innovation point of view, because once you have a lot of your data on the cloud, you are able to innovate at scale, which you can't do if you just don't have that ability. So when it comes to regulators, there are a number of things that they are worried about. And we have ongoing discussions with them about those things. The first one relates to data security.
yeah.
And it's a big, big issue among regulators who want to be assured that you've put the right security measures in place for the data to be protected. And they also want to kind of have a sense of how to regulate this, and they're working on that. The second issue that the regulators are really worried about is movement of data across borders. So I always joke on some of my travels with my regulators, where I would meet a regulator and they would say, "I'm happy on the cloud, but for my country, which cloud says it's in the data in my country is there? Show me which, and you try and explain the concept, but in reality, there's a lot of fear because data can be weaponized.
Yes.
That's a big issue. Also, there
Yeah.
is a lot of fear about sovereignty. So that if, for an example, a big country
Mm,
decides to apply sanctions on another country, and if the
yes.
data is with that country's big organization, it might be something that they can use against them. And then on the card and payment side, there is a specific regulation that relate to card payments about how to protect the underlying data in all transactions. And there, almost all organizations that deal with card data have to be PCI compliant. You have to be
Yes.
PCI compliant. That is so important. And I think that regulators are now at the point where they are going to be meting out fines for those organizations who are either not PCI compliant themselves or their counterparts that they deal with. So if,
Mm,
for an example, I am a merchant for a large retailer and I am PCI compliant, but that retailer is not PCI compliant, you might find that in the future, the regulators might start to fine us. So those are some of the challenges that we see.
interesting, Lincoln, because there are so many engagement, as I see, and you have mentioned before that You want active participation with the regulators and walking the journey together. I haven't seen any involvement of the customers in this discussion. Do we have customer groups that you engage and they provide a view in terms of how data is managed, how their finances are really dealt with?
Yes, almost, I think over the last 3 years, I think last 3 years, we actually are very rigid about making sure that any solution that comes to the market addresses a client pain point. I think that is what Taba was saying quite earlier. I normally work with my team to say when they are working on a solution, and I say to them, are you trying to sell vitamin pills or are you trying to sell painkillers? And they think it's politically correct. They say, no, we're trying to sell vitamin pills. I'm saying, I'm not interested. Clients want you to sell them painkillers because they've got a particular pain point, either in their business or in their personal capacity. How do you come with a solution that solves that? So many of the things we're working on, we try and baseline them with clients, get feedback from clients, even the things we prototype. In the past, you would have had people working there, then they launch the product, and then they say, but there's no adoption. Like, duh, there's no adoption because you never spoke to the client. So Agile forces all of us now to co-create with our clients, to show them the minimum viable product, make them test it, see it, so that by the time we launch, there is a lot of buy-in from our clients. So there's a much more involvement with clients. You must also remember that clients also see us in the same way they see Facebook, Google, Instagram, and all of that. If we can't provide what they provide, we are seen as laggards. So in many ways, it forces financial services to be even more innovative. Are we there completely yet? No, we are not there. Because remember, in a bank, you've got two types of leaders. You have what I call digital natives. These are people who are already with the technology and all of that. They are great for digital transformation and digital disruption. But sometimes what they lack are the organizational skills, the culture, taking people with them, leading. Then you've got the digital immigrants, like myself, my age, where we know the culture, the leadership, and whatever, but now we have to learn the new technologies. So both groups have to master what the change means for a financial institution and know how to work with clients so that you still remain a bank, you're secure, kind of boring, making sure nothing goes wrong, but you're also responsive to the needs of clients, particularly young clients who don't have time to be standing in a branch or standing in a queue and so on. So we try and come with those things. If you said to me 3 years ago or 4 years ago, you can order a credit card online and get it without moving from your house, you have said it's impossible. If you had said to me 2 years ago, you can have a virtual card and have 6 virtual cards, one for Zando, one for Uber, one for Taxify, all of these things we've all had to do because we've been listening to our clients.
Wow, thank you. Customer experience, it is key, and it's always good to design with customer in mind. I would like to bring Tabs back to the conversation. I am told that they found a way for her to connect with us. Tabs, would you then tell us about Uprise Africa platform and also talk about the rise of crowdfunding platform within South Africa and what are the regulatory challenges?
Okay, sorry for that if you couldn't heard me before, but like I said that, crowdfunding platform was born with hello, can you hear me? Can you hear me?
We can hear you now. Thank you. You can go ahead.
Okay, I'm saying that Uprise Africa, as you know, it was born out of to bring a solution to a problem. Access to capital is surely a problem, and it is not a level playing field, nor it is, particularly merit-based at early stages. And when it comes to the late stages, when it is almost impossible to rescue a business, it's too late. So these are one of the challenges. So it was needed that their alternative funding solution is brought, and this concept is, although very old in other countries, for South Africa, it is still relatively new. The regulators have been putting their heads together with us on how we are doing it. Like I said before, that we are trying to adopt the regulation rather than exempting any regulation. So within the current environment, there are regulatory, obviously there are compliance needs from the Companies Act perspective and the Financial Markets Act perspective. This does make our life more challenging because it's too much of admin intensive, but until and unless there are regulations in place, we have to do what we have to do until there is a regulatory framework which is done by the FSCA. They are still working on it, and it's been almost 3 years now. So, yeah, but end of the day, obviously, like Lincoln also said that, regulators have to do what they have to do. They have a fiduciary responsibility to protect retail investors. So it is for them also, it is, they cannot just open the space. But same time, we believe that in other countries, regulators have put heads together with the platform founders and try to bring some exemption on the Companies Act where these startups can be easily crowdfunded.
Okay, so just tips around that. I mean, we crowdfunding is online, I believe, and you've got a lot of different restrictions. Sorry. And how do we then deal with that? Do you have to engage multiple regulators to get the product going and money flowing to different people in different countries?
For now, the companies can be crowdfunded are only in South Africa. So only South African companies can be crowdfunded. But when it comes to foreign investments, the foreign investors have to comply with their own regulations in their country. Obviously, the process in South Africa is not as user-friendly as it should be from the Reserve Bank perspective. But retail investments so far we can bring in. But when it comes to if the campaign is not successful and when it comes to refunding those investors, it does become very challenging for platforms. So we are absorbing those costs for now, but going forward, like you said, that there are multiple engagements with multiple regulators. But one thing now regulators has done is, obviously, I'm sure you know about it, they've created this innovation hub out of 5 regulators. So the Reserve Bank is there, the FSCA is there, but the only organization which ideally should have been there was DTI, because crowdfunding is also about Companies Act. So unfortunately, that organization is not part of Innovation Hub. So we do, get those challenges when we try to negotiate any exemptions with that body which has been created.
Interesting. Thank you very much, Tabs. We'll now go to question and answers. I've got Sabelo Sibanda saying that in South Africa, there's a space for reg tech startup to offer software as a service, I guess, a solution that works as a catalyst for the development of inclusive fintech. Is there a space for reg tech startup to offer software as a service solution that works as a catalyst for the development of inclusive fintechs? The second question is to Lou. What is your opinion on the use of layer 2 solution in crypto payment, such as Lightning Network? Is there a strong possibility of such solution becoming the de facto in all payments? Lou?
Thanks, Veronica. Yeah, that conversation and that debate is as old as the history of Bitcoin. There is no definitive answer because you could architect it in either of 2 ways. There are pros and cons associated with either architecture. I don't think you're going to find that one chain has all the transaction activity. So I think you're going to find a combination of both. And I think it depends on what your use case is as to whether or not you architect for payment and settlement at layer 1 or layer 2.
Okay. Lincoln, how does a fintech entrepreneur gain access to Standard Bank APIs, including account aggregation, of which some local banks have been resistant? I thought that question will come.
Yeah, no, I think it's good to maybe just make contact, just directly make contact with me so that I can understand the unique proposition that the entrepreneur has, what relationship we can strike, what do they bring to the party, what problem do they want to solve. Because in the current environment, we don't have the regulatory environment of PSD2 in Europe itself. So today, I think the partnerships are the ones that are driving open banking. So if an innovator or a fintech comes to us and say, we've got this tech or we've got this solution, it can benefit your clients, or we want to do this, then we partner with them. In that context, we are able then to share our APIs and work with them on a range of things. So a lot of the products that we've got now, we've got them working with fintechs, and they've got our APIs, and we've got theirs, and we're able to work in that way. So rather than a generic answer, it's more better to contact me directly, and let's sit down and understand what proposition the fintech or the innovator has. Is it in line with our plans? Is it something our clients are looking for? And so on. Because I think there's something that Tava said earlier, just before there were gremlins, but she said something very profound, which is it's never about the technology. Never about the technology. It's about what problem are we trying to solve? Or who are we trying to solve? And then let's look at the technology that can solve that. So sometimes you might find an entrepreneur has a technology. It's a great technology, but it's got no use case. Or we may not see the use case and we're blind to it. And then tomorrow they send it to somebody else who sees that, and then they go and make something great. So there are going to be hits and misses, because all the time we're all trying to look for new ways of doing things. So the best way is approach us, let's have a chat and see whether we can find one another.
Interesting. There you go. We'll connect you with Lincoln, then you can have that engagement. And it is important as entrepreneurs that you engage with the big companies, institution, and see how you can add value to the customers and build the right business case and the user case for your solution. What are the challenges within the SRB relating to crowdfunding? Tabs, that I will give it to you.
Okay, so challenges are not in particular to crowdfunding when it comes to Reserve Bank. Reserve Bank, you know, every investor is having challenge, whether it's crowdfunding or foreign investment. So SARB challenges are not in isolation only for crowdfunding. Generally, the SARB has to be more user-friendly when it comes to bringing foreign investment. Rather, the question should be that what are the incentive from SARB when it comes to crowdfunding? So that is what we would ideally want to see, that if are there any incentives? For example, UK has an incentive on investing on equity crowdfunding. They get tax exemptions like we do here in 12J. But those regulations are in UK are particular to crowdfunding platforms. So SARB has to be engaged more closely when it comes to bringing foreign investment, and small amount of investment abroad foreign is very small. I mean, they do out of charity. So if you are doing a startup and you are asking $200 or $300, it's not a big investment in some investor sitting in Silicon Valley or US or UK. They can do that out of the passion, out of trying to help African continent and try to bring, because there are so many impact fund ring fenced for Africa. It's just that how do you engage with these regulators and try to make these processes user friendly for them? We are trying that. We are engaging the regulators as much as we can, but you know, South Africa processes are always very slow.
Interesting. Thank you very much for that. So now what we'll do is that some of the questions are coming through very fast, and we will definitely connect you with the panelists that they can be able to elaborate on some of those questions. I'll take the last question from Anonymous. Pre-open banking, as we as consumers were protected by banks. Well, that's just my assumption. However, this is its introduction. There may be more market players who will be able to collect our data. The question is, will third parties abuse our data, or will they consume it to our interest? In addition, do such third parties provider have advanced security system to combat fraud? Who will take this one?
I'll take a step. So
Thank
I
you.
think that the issues raised are so fundamental because we all want ease of access, easy to use things, make things faster and agile. But it must never be at the expense of security and our data security in particular. So the regulators have been quite strong in making sure that we as banks remain accountable. It doesn't matter who we partner with, but we will remain accountable if something has gone wrong. So when there's a data breach that is going to do with a partner of ours, we have to find a way of resolving that because this is client data. Now, when we are thinking of opening up the payment system, opening up the financial sector, these are some of the things that regulators are looking at. To say some of these players are nimble, they can offer great services, but do they have the security environment to protect the data of clients? And this is a big, big, big issue. So the current laws that have been passed, certainly in South Africa, POPI and access to information, all of those are actually very stringent about what we as industry players can and cannot do with the information that clients have or clients give to them. So this is not going to get any easier for us as industry players, whether you are an established industry player or a new industry player. The issue of data security and the sanctity of the information of the client is going to be very, very, very important. Because, I mean, just think about it. You don't want somebody knowing your stuff simply because they can contact somebody else. You know, even if somebody fights with anybody in a bank, we can't give that information to anybody else but you. But the same rules should apply to any other player. Otherwise, people's information will be out there and you don't be safe and secure.
Thank you. I have a question myself. We are in the new world, we've got new rules of this world. Are we going to get into a place where we have a compliance with the service?
Well, I think it's inevitable. I think that we have, you know, we briefly spoke about this. We're seeing more and more and more regulation, not less regulation. And if I just think, for example, of something as simple as, I don't know if any of you recently had to go through the process of doing the compliance checklist for the CIPC. I think we might be the only country in the whole world where the directors of a company have to complete, I think it's about 50 questions, and say, we have complied with all the following provisions of the Companies Act. And it doesn't specify anything about the size of your company or what your turnover was or how many people you employed or anything like that. So we definitely have a situation in South Africa where the regulators tend to err on the side of being burdensome. And I think that whenever you have that kind of situation, it's inevitable that you will see startups stepping into the breach and making it easier to comply.
Thank you very much, Lincoln. Thank you. I think I will wrap up. Thank you for your participation. I would like to thank the panel for participating on this digital transformation brought to you by Standard Bank. Thank you, Mr. Konmali. Tabs, thank you very much. Lou, thank you for your contribution. And I would like to thank the audience for sharing your comments, your questions, as well as your insight. Once again, thank you, Standard Bank. It is Veronica, and it is bye for now. I will hand over to Tabiso.
Well, thanks very much to the panelists. I will not lie. Coming into after the first 3 episodes, I thought, geez, I'm in the wrong industry. This fintech thing's easy. It looks like it's all fun over there. There's innovation and everything happening. But after today, I just thought, ish, I might have to think twice about that. There's some heavy regulation in the industry, and I think it be a new place. I think this conversation was quite good in understanding that it's not all roses out there. There's actually a lot of stuff that has to be considered. So very, very big thank you to the panelists. Veronica, I think you did an amazing job moderating and really steering the ship. So on behalf of ABSIP, we really like to thank you for your contribution. Geez, for the panelists, I don't know where to start. Tabs, maybe I'll start with you. Big fan, this is me on a personal level, big fan of what you guys are doing at Uprise. Know a lot of people there, really, really love your platform and what you guys are doing. Amazing to, actually quite interesting to hear, obviously, that it's so easy. There's a lot of regulatory hurdles that you got to get through. But really, from ABSIP, I think just keep doing the good work. Really think you guys are doing an amazing job. Lou, I won't lie to you, my one experience with cryptocurrency was back in 2017. Where I got it and they said, try this thing called I think they said it was the ARB trade. And I did something, and then basically I think it was Ethereum or whatever they call it, and basically got lost in the blockchain for about a week. And I said, no, this blockchain thing's not good. But overall, I think it eventually showed up a week later. And I think everything that you mentioned tonight, just about of decentralization, obviously, and all the hurdles that come to getting there and where we are now, really, really, really did resonate. And it's really good to know that obviously this is all driven by consumers, and that your money is not going to be held up in just one sort of like entity. That it's really there's a whole industry that's really coming to the forth to solve the problem for consumers. Lincoln, one of your first comments was on the regulators, and I work in the derivative field. When those regulators come, we see them as people, and you just when you see that regulator coming, you run away. I think everything that you mentioned there with regards to working with them, so that when you're in, when the final solution is there, they're not 10 meters behind. Usually we want that because you want that pit bull to stay behind you. What you say, it's not really a pit bull. It's more like it's like a chihuahua. But really, I think everything that was mentioned tonight was very, very insightful. And I really like to thank the panelists for really your contributions to this webinar, for taking your time to just really just educate us tonight. Really, really appreciate it on behalf of ABSIP. To our sponsor, who is Standard Bank, who really, we approached them with a proposal back in July, and they really, they took it upon themselves and really said that this is a topic that really, really needs to be discussed and that people need to understand. And they put up an amazing team of people. I'm just going to read out some of the names here, and please, hopefully I don't get killed, but this is an amazing team that really contributed to this thing. Michelle, Desiree, Juanita, Umi, Vuyiswe, and I really hope I haven't forgotten anyone. Really, I think, this whole series would not have been what it is without Standard Bank. So we really want to thank you guys for your contribution. And then last but not least, to all the attendees, to all the ABSIPers, we really want to thank you guys for coming out and really engaging. So I think from a NEC perspective, our goal is always to make sure that we're bringing information and content that's relevant and that really, grows us as individuals. And for you guys to come out here and giving the most precious resource, which is your time, to listen to basically what's happening in the digital disruption space and what ABSIP has to offer you is really it's really incredible for the support that you've shown. So we want to thank you all for coming out on behalf of the NEC. It's really, really appreciated. And with that, I think we are going to close off the night and say thank you. Cheers all.
Thank you.
Thank you.
From as early as I can remember, I had one wish. That my parents could have a voice of their own.
Standard Bank. It can be.